Welcome back, everyone, to another Market Open live stream. Today, we are going to get some more housing data. This morning at 9 a.m., so in about 3 hours, we're going to get the FHA Home Price Index and the S&P CoreLogic 20-month or 20-city month-over-month and year-over-year indices. Now, both of these will be based on numbers in September, which is weird because October was a really bad month, in my opinion, based on what we've personally seen. I said that yesterday before the new construction home builder data came out, and the data was bad. All the real estate bears were having a field day about how horrible the data was in October. So curious to see how this looks for September. Shouldn't be as bad, but it may already have started trending in that October direction. September and October were hard because that's when all of a sudden you had interest rates, on the 10-year yields skyrocket up to 5%. So, that sent the signal to buyers that, okay, there's no end in sight. And no, that was wrong. There definitely was an end in sight. But anyway, it created a lot of fear. So things slowed down quite a bit. But anyway, we'll get those numbers in just a wee bit. So that'll be fascinating. Then we've got L Stonks. So yesterday, Tesla sort of bobbed around and actually ended up positive, up somewhere around 27 basis points, up at maybe 8 here in the pre-market. But it was really a firm who took the cake. I mean, a firm up 11.97%, and then another 2% now in the pre-market on a lot of enthusiasm over the Black Friday sales. We haven't even gotten numbers yet on Cyber Monday. I'm actually kind of curious to see if we can get some Cyber Monday research, and usually it takes a few hours into the day for them to come out with the full data, so that might take a minute. But the Cyber Monday spending data will be really cool. Yeah, right now, Barron's is just suggesting, as of a few minutes ago, Cyber Monday spending set to break records. Set to and actually breaking records are different things. But, we do have data for Saturday and Sunday. So on Friday, we had a 7.5% jump from 2022 levels, $9.8 billion spent for Black Friday. On Saturday and Sunday, with a 7.7% jump, $10.3 billion spent online Saturday and Sunday. Wow, that's crazy. Shoppers are expected to have spent between 12 and 12.4 for Cyber Monday. That would mark the biggest U.S. online shopping day of all time. The trend suggests consumers are using buy now, pay later options, which could reach an all-time high, up to another 782 million of sales, 19% surge from last year. Well, wait a minute, though. If we spent 12.4 billion and BNPL was, I thought BNPL was going to be more than that based on how everybody's freaking out over BNPL. Buy now, pay later was only 6.3%. I guess maybe people are enthusiastic over the growth, but I mean, I feel like you're comparing it to a little bit of a whole of last year. And there's so many BNPL buttons now. It's like, who do you want? Apple, Amazon, Klarna, Affirm. Affirm used to brand this as like, well, we have exclusive partnerships, which made sense. It kind of made sense that, yes, for a brief moment, that companies would want to have an exclusive partnership. So it was kind of like one clickable. But then you could just have exclusive partnerships with like 5 different companies, and it's still one clickable. Yeah. Oops. Anyway, I guess we'll see what happens when that data actually comes out a little later. So then we have JPOW talking Wednesday. If you're not prepared for the numbers yet, or I guess the data or the events or the calendar, that's what I'm trying to say. Mark your calendar. That's what you want. Mark your calendar. So mark your calendar on Friday. Jay Powell will be speaking at roughly 7 a.m. And then he has like a panel 3 hours later. Actually, it might be 4 hours later. So he has a couple events on Friday. We have a debate between Gavin Newsom and DeSantis happening. That is actually happening. Let's see here. Thursday, the 30th at like 5:30 p.m., which is really interesting because that's when the Cybertruck event is. Oh, man. Okay. And then, yeah, that'll be interesting. The cyber event this week. It almost sort of feels like Tesla stock's kind of been, we'll wait to see what happens. If you look at the Magnificent Seven stocks, all of the seven that are magnificent have been magnificent except for Tesla. See, look, you go to like Apple, it's basically at all-time highs. You go to MSFT, definitely at all-time highs. Nvidia, all-time highs. Meta, all-time highs. Berkshire Hathaway, not quite all-time highs, but close. Point is, all the big companies had a really, really, really nice rally since November, so the last 30 days. Tesla hasn't really done much in the last 30 days. Well, I guess 30 days ago it was trading for like 200, so I guess this is up 15%, so maybe you can't poo-poo that. But you got this downtrend that you really got to break out of here. What is this? Break this downtrend. Okay. Okay, we will. There we go. Somebody end it. End the downtrend. Let's see here. Yeah, it's starting to look a little channel-like. We don't like that. Yeah. Give us this directionless downtrend other than down. A ripoff. Anyway. Bloomberg was making fun of Tesla this morning or about the Cybertruck, naturally, because they're like, Cybertruck's a nightmare for Tesla. One thing that is interesting is they talk about the hardened stainless steel that's used on the outside being very heavy. And there are suggestions that the Cybertruck battery is only a battery that'll sustain about 267 miles of range. So a smaller battery, probably to keep the overall weight of the car down. But that's going to make it harder to push into a new pricing tier if you have a smaller, more locally purposed vehicle, right? 267 miles is great for local contracting work, basically, in a day. You just have to plug it in every day. But that weight, probably there's probably a balance between putting too heavy of a battery in, and it's, I believe, the Cybertruck is exclusively using the 4680s, so there's almost an incentive to use less of them because Tesla hasn't been able to scale that as quickly as hoped. So yeah, that was sort of like your typical kind of Bloomberg making fun of Tesla, but I also don't think what they're saying is horribly inaccurate to observe. They didn't mention that about having a smaller battery because of the heavy metal. They just mentioned that the battery's smaller and the metal's heavy. And I'm like, well, it kind of makes sense. You're trying to reduce the overall weight. And realistically, if you need your distance driver, then, buy like a long range Model 3 or something. I don't know. Buy something else. I think that Tesla really needs a lower range vehicle. Mostly because most people, if you get in the habit of plugging in your car every day, you don't actually need to be lugging around all these crazy batteries. You're actually just harming the efficiency. So, yeah, the long-range Model 3 is 333. The standard Model 3 is 272. So the CT Cybertruck might be more similar to the standard 3. Although I think the Y gets a little more. 348 on the Model X. It's a larger vehicle, so you have more room. Model Y, 260 for the standard Model Y. 330. Okay, so it's actually the Model X so far that does the best. What about the S? No, I got the S. And that one, oh, the standard S is now 405. And the Plaid is 396. Wow, 400 miles. I did not know they shoved that many batteries into the standard S. Wow. That's really good for the standard Model S. But, 405, you're paying $75,000. Why? When, for the Model Y, you could get 330 miles. So what is that? 15% less for like half the price. Less than half the price. Nah, half the price is about right. $38,000. Yeah, that's about right. Yeah, 15% less battery for half the price. It's great. So just give us a smaller battery and then keep the price of that Cybertruck low, and then in the future come out with the bigger, longer range one. I don't know. That'd be my thesis. But I guess we'll find out Thursday. Maybe. 10-year Treasury basically flat, sitting at 4.38. Let's take a peek over here at what they're arguing about.
And getting rid of your Medicare and Social Security benefits, all I could think of is somebody ought to buy the dude a calculator.
I agree. We have to address entitlements, but that was sort of what I was going to say, Rick, and I'm going to play devil's advocate here, because if you do tell the tape, in August, we had a big problem. There was more bond issuance than the market expected. There was the Fitch downgrade. And then everybody came out of the woodwork and said, this is all about the long term. And yet, as we go through day by day here, Rick, we are selling the bonds. The bonds are getting placed. Yields have come down. So all of a sudden, just to play devil's advocate here, it doesn't seem so much about the long term. Seems more short term. The shorts have been wiped out and the longs have taken a position here. So it seems like we are able to sell the debt, and it's not necessarily about the longer term solvency or ability of the U.S. government to place its debt.
Yeah.
I know that would be kind of what I would think a third grader would think about it. I'm not insulting you, but unfortunately, that's the way many in the market think about it. Oh, well, just if we could do it today and we could do it next week, we're fine.
Right.
Don't worry about it. But we're going to have to keep doing it. The average yield of our debt to service, it keeps going up. Who's going to be the new players? Bigger and bigger size, fewer and fewer takers. I can't find a way to square that, Steve, honestly.
Rick, is there an issue here with the dealers taking it on the chin, auction after auction? At some point, do they rebel and they say, you know what? I'm just not going to lose money on this again. I guess ultimately they take the paper because, first of all, they have to, and they're able to sell it afterwards. And I'm assuming they're making some money. But these numbers that are being taken down by the dealers, they seem to be relatively high. And the indirects do not seem to be stepping up here. And that seems to me to be something worth watching.
No, I completely agree. And I think when we look at the dealers, and for those that maybe aren't so familiar, basically dealers are dealers because they're required to have a certain presence and a certain takedown at every auction. And it's in a group. They're supposed to make sure it moves smoothly, of course.
Right.
At one point, we had almost 60 primary dealers. Then there was a real dearth. It really dropped down to small double digits. It's moved back up a little bit. But the answer to your question is most likely they will slowly drop out again. We've seen it happen. In the end, the Treasury and the Federal Reserve really need these players, and there's a variety of things they can do to potentially help them out. But That doesn't make me feel all good and fuzzy either. The real issue here is simple, okay? Anybody out there has credit cards? I mean, imagine if you had a $500,000 balance and you basically make 50 grand a year and you continue to spend more every month. That's where we're at.
I can counter that, Rick, just for fun here, which is that if I have a $100,000 mortgage and I make $100,000 a year, I have a debt to income ratio of $100,000. That's 100%, right?
And what's the house worth, Steve? What's the house worth?
Well, you know, Rick, you're going to lose that argument. I'll tell you why. Because if you look at the U.S. as a credit-worthy entity and look at our asset to coverage ratio here, we are extremely credit-worthy. That's not the problem. The problem, Rick, becomes how much we're spending on the trajectory, but also the political will to pay it. And so everybody I talk to
Moody's
says
and Fitch.
it's a combination. That's what they said. They said it's political will, but also it's the ability to tax and the ability to cut spending at the same time. So basically
what you're saying is political will has no desire to address this, and it's okay because it works today. Sorry, I still don't feel good.
On that, we should agree and leave it there.
Thanks, buddy.
What do you think, Joe?
Yeah, there's so much frustration over the expansion of debt in America, and it makes sense. You know, eventually the Ponzi breaks, but you know, you've heard me talk about it before. It's not that big of a deal. Thanks, by the way, for the compliments there on the Blackboard video we did yesterday. That was fun. I enjoyed that. Let's see here. Let's go take a look at the United States interest as percentage of federal budget. That's another thing you could look at, is sort of the government's interest payments as a percentage of GDP is an option, but then you could also look at the government's expenses as a percentage of the actual income of the government. So I will try to grab both of those quickly. Let's see here. So here's our current interest as a percentage of GDP, which suggests the good old Ponzi is nowhere near the levels we've previously had. Now, obviously, these rates will refinance, so they might end up going even higher, but by the time they do that, maybe they'll be even lower. And here are just the nominal interest payments. So you can see that on a nominal basis, interest rate payments have skyrocketed. We've gone from, 300 mil, 400, 500 to how about basically $1 trillion of interest payments. And again, when you take that and stack it up to GDP, it's like, yeah, well, the economy is growing faster. So then it's like, does that make it right? Probably not. Interest. Sometimes I found it before. Federal. It's like interest payments as a percentage of the federal government's actual income. I can't find the darn thing. Anyway, I'll keep hunting for it. But don't worry, the Fed will be printing money soon enough to help contribute to the problem. Oh, it's crazy. All right, so some folks talking about gold maybe going to a new high. Thought this was interesting. Gold's been, despite all of this inflation, such a somewhat sideways trading commodity. And when I think of gold, I just think, oh, it should have gone up a lot more during this last inflation cycle. But no. Instead, we're just going to go down or stay flat. I mean, we're like flat for 3 or 4 years here now at 2017. Bitcoin's still sitting at 37.3, waiting for that BTC ETF. Brent still sitting at $80. Everything kind of somewhat stable right now. Let's go see what those suits are saying. Another Fed rate hike would be unprecedented, but not impossible. Yeah. Okay. They compare to the 1990 recession. Ooh, the one nobody really cared about. Okay. The long lead to the 1990 recession. Fed's 14-week pause and re-hike after 14 weeks. Ooh. Has it been longer than 14 weeks though? Because when did we last get our rate hike? I think that was July. So let's see, FOMC schedule. Okay, so Fed meetings were July 28th. Yeah, I'm pretty sure that was our last one. Let's look together here. These were the minutes. I could just go to the back to see the statement. All right, this was the statement. Here it is. Undertake operations to go to 5.25 to 5.5. Oh, but does it say that they raised? No. Oh, well, darn it. Okay, here. Press conference? Statement? This was July. I can't remember if it was July or June. One of them was the last one. And I want to calculate how many weeks it was since then. Raise. There it is. 5.25 to 5.5. So that was July 26. Weeks since July 26. It's been 17 weeks. Yeah, suits. So the market is underpricing the probability of another rate hike. Bond yields are starting to look on the low side, prone to be pulled higher by nominal GDP. Okay, we'll see about that. Let's see. It would be rare for the central bank to hike again after such a lengthy pause. There have been 5 occasions since 1971 when the Fed has done so. Well, 71, that's going to include the mid-70s, which was a disaster because they had the whole start-stop going on. But when rates are already restrictive as they are today, it would be unprecedented. The last time they did that was in 1988 when they had a pause of 14 weeks. Well, yeah, we're, like I said, at 17 now. So I don't know that we're going to get another one. The question really is, how long do we stay here? All right. What's this? Wow. Love the hair. It's like he put his fingers in a socket.
To people and subjects that I wouldn't ordinarily know anything about. And I think it's given me a competitive advantage in Hollywood. It's given me a competitive advantage in life and in business. And I think it would do that for anybody else. And that's why I have this new book coming out that is, as you point out, the expanded version of A Curious Mind and a face-to-face art of human connection.
Brian, you get to open doors that most people don't.
I have no idea what he just said.
Joint Chiefs of Staff about this very issue the other day on Sunday Morning Futures, and he said to me, look, in order to push back on Iran, we need to be visible. We need to be out there. We need to ensure that they understand if they make...
What is going on? Like, this is Fox Business screaming about Iran. Then we have CNBC with some Hollywood guy pitching a book. Bloomberg, please give us some hope that there's better.
Rekindle that relationship by taking the productivity benefits, which have been revenues per employee have improved by 1/3 over the last decade. So banks and tech have been working, but I think AI can take that to another level.
Is it a kind of thing where there'll be a few winners? You mentioned Goliath, Mike Mayo, in your note. Is it a kind of thing where 4 or 5 will win and the rest lose, or can it actually be a benefit distributed across the industry?
Well, I think most jobs at banks will be impacted. I mean, think of what I do. I'm an analyst, and analysis can be improved by this extra tool called AI. Now, I do think there will always be a human in the loop for most cases. In other words, to prepare for your show today, Lisa and Tom, I went to Chat GPT and said, what should I say in one sentence about this? And they said, it's a revolution that will enable productivity savings and better customer service. Well, that's an improved. Well, that's an improved starting point, but it's partly wrong. First of all, I'm not sure it's a revolution, especially at banks. It tends to be more of an evolution, and simply by enabling that potential doesn't mean that becomes a reality. And you've seen false starts. Cloud, you've had some buyer's remorse. Blockchain didn't come out as quickly as expected. The dot-com bubble 1.0, Tom, you remember all these internet banks which didn't survive. So I'm positive on the implications of AI, but I'm aware of the caveats.
Let's go back even further. George Ball EF Hutton, they blew it. They couldn't keep up on technology. This is, Lisa, when there were cards with holes in them and a thing called Fortran. The answer is, I want to know who the losers are going to be in this. I mean, I know you got single Best Buys and all this, but what is the scale of the losers that you see in technology and banking 3 to 5 years out?
Well, I do think Goliath is winning, and you have this poll by Evident. I know you've had the founders on your show. In fact, they have an all-day conference in New York City tomorrow. So JP Morgan is number one front and center right now, and their investments in technology are paying off. I'm surprised to see Citigroup in the top 10 for all their issues with their back office, and they have major issues. They're making some efforts with AI. On the other hand, those banks that have not advanced with digitization and the cloud and getting their data together could struggle. And I do wonder about some of these mid-sized banks. I mean, do they have the scale to really leverage these solutions and getting talent? Talent is such a big issue.
That's where I want to go.
And you can't just buy talent off the shelf. You can get solutions, but who's actually going to implement those solutions in each business line?
So when I'm listening to you, I'm thinking, how much are they going to pay them? I mean, we're talking about OpenAI paying $800,000 to engineers at just sort of base level. I mean, how much are banks going to have to pay some of this talent to come to their bank and develop similar solutions that can effectively support and reduce certain headcount in certain areas?
Well, I think what you'll see a reduction in headcount, and some of those savings plowed back into paying other employees more money, especially AI engineers. They're in serious demand. But if you go to one of the largest banks, you have a whole career path. You can scale these solutions across tens of millions of customers, as opposed to going to a smaller bank. I mean, what's your pitch? Now, there are some smaller banks in this Evident survey that performed quite well because they were already ahead on technology. So I think those winning in technology can keep winning more. And those that are behind are going to have kind of a existential moment here.
This can all work if banks have the cash to invest, right? And that sort of, you put a pause on that at a time when potentially there could be a slowdown and there could be some kind of reduction in revenues tied to slowing capital markets. How much, I understand this is a longer term call, but how much do you see a thawing in that kind of environment next year versus a tightening of the screws? I mean, this is sort of one of the big disagreements for the backdrop for banks and capital markets activity at a time where yields are still high, but we also are potentially going to start seeing the effects of that.
Well, I promise you, I will be the first analyst to ask that question on earnings calls if banks are spending too much money. Banks have no choice because of the headwinds from rates, recession possibility, and regulation. They must get more efficient. So if I'm the CEO of any bank and you're coming to me with the program for AI and want to invest a lot of money, I'd say, great. Where are you saving the money to fund that?
Nobody cares. All we want to know from Mike Mayo is what to do this year, 12 months out. 12 months ago, NASDAQ flat on its back. We've had a magnificent 7 moonshot. Right now, Keefe Bruyette index is 25% above the pandemic low. Is this the year 2024 of the banks? Do you load the boat here on banking?
Well, look, the long arc of the benefits of the industry de-risking has still yet to play out. Banks didn't get credit through the pandemic. The excuse was the government stimulus. Right. Right now, you had some smaller regional banks fail earlier this year. So it's still delayed. So I still think over the next 2 to 3 years, you see the benefit of the improved banking industry resiliency play out, and then they aren't as risky as perceived, and they re-rate at least back to historical. And then the bigger question is longer term, do they re-rate above? Now, it's not immediate, Tom. I think as you get further out, you get better inflection points when it comes to bank spread revenues, interest rates effects, monetizing that capital markets backlog, and more clarity on regulation, which is a very big issue still.
Just real quick, just to follow up on the AI, what is the right AI investment? Is it getting some sort of application to write your reports for you? Is it being able to collate data from your customers to basically prescribe what they're going to do or want? What's the correct way?
There's no one size fits all when it comes to AI investments. It's about banks tailoring those AI investments to their use cases that they have that's unique to them. So I find interesting anything related to compliance, fraud, cyber. That's where you're seeing some really low-hanging fruit, early benefits. I think when it comes to some additional automation in the back office, I love what it can do for technology. The idea of COBOL program change to Python, change to C++, the ability to change archaic code. And by the way, most or almost all large banks still are advertising for COBOL programmers. Tom, come on.
You're killing me.
By the way, my first programming class had punch cards too. So
yeah, what were that ancient? Lisa's like, what are they talking about? Single Best Buy, 10 seconds.
JP Morgan and Citigroup. I had said,
okay.
Barbell approach.
Barbell approach. Mike Mayo, thank you so much.
Really nice. Thanks. One thing that I took away from this is notice how he's like, oh, I'm going to be going to those banks and being like, yo, if you're going to spend money on AI, where are you getting it from? Where are you cutting? I don't know if that's the right mindset here. I think the mindset is we will spend money on AI so we don't get left behind. So we're faster with AML, KYC, bank, monitoring, wire approvals, whatever it is that makes us more efficient as a bank. Underwriting, whatever, we will use AI, and we're not worried about what it's going to cost because we know it'll pay for itself. And the efficiency that you would get from actually deploying AI at scale at these large companies is exactly why you're seeing the large enterprises throw so much money at NVIDIA chips. And of course, just AI in general, whether it's AI services of various different companies, even to the extent that Salesforce does AI, or certainly Microsoft and Google starting to throw it into their Google Workspace, little AI features. Obviously, the advertisers are throwing it in. I was looking at Teachable the other day, where we were, we run the courses through there, and they had a button. Like I was already done. I just had to go upload all the videos that I made for the gold course. But they had a button there like, have AI create your course outline, and like the outline of what you should. And I'm like, no, like I don't want that. But I suppose theoretically you could do that. I'm like, no, I want it to be unique and Kevin perspective, not AI perspective. So I don't use AI to make my content for courses, but I did think that was very interesting. You're basically seeing those buttons pop up everywhere. For example, I go into Google Admin, now it's like, oh, AI recommendations for this, AI that. And so it's just another button that now you can press. Well, we'll see how it evolves. All right. Let's see stickies. And then I wanted to look at this. I'm going to pull this real estate thing for a moment. So where do we sit right now? We're about 30 minutes to go. It looks like the NASDAQ's down about 9 basis points. Tesla up about 7. NVIDIA up 18. Affirm's up 163 bips. Apple's up a little bit. And what else here? Nordstrom. That's boring. Okay. So in the meantime, I'm grabbing a few things on look at where over year, single family values have been changing. And this is interesting because it's very similar to what we've been seeing on the ground. And I'm going to pull these. There we go. Okay, perfect. Yeah, so the COVID destinations had the biggest hits I've noticed. And this is year over year. I think this is September or October. I want to see. Anyway, this is a Goldman piece here where they're talking about it. Doesn't I find out if it's September or October. But anyway, look at this. Florida and Cali up 1%. But all of the more COVID-y markets, Arizona minus 4.3%, Vegas minus 4.8%, Idaho minus 4.8%. Those 3 states, I've noticed some really good softening there. And I have to say is, even though I've traveled to them to hunt for real estate, I haven't bought in those states because of this exactly. I mean, I've been seeing this on the ground before seeing it here in paper, which you generally always do. there's substantially more weakness there, and there's substantially more strength in Florida and California. So looking at this chart, it's kind of like, oh yeah, all right, that makes sense. It's kind of what we've been watching. So another interesting chart they had here was building permits. I think, yeah, this is the 3-month building permits by state. Look at the, like, I kind of think that you almost want to be where there's less building if you want to buy existing, you know? So I'm going to write that down. If you want existing, do you purposely go where there is less building? Well, I don't know. That's a question. Well, where is there less building? Colorado, California, Oregon, Washington. Oh, why is it turning tight? Hold on. Wrong button. Redo. Here we go. Aha. Yeah, look at that. It's your western states over here. I don't know who's moving up north over there anyway. And then you got Colorado here. But really, the building is just exploding everywhere. Arkansas is negative. Ohio's negative. New York's negative. You know, the Northeast over here is pretty negative. Rhode Island, Connecticut. It's a little expensive to build in some of these areas. So that's fascinating. This is 12-month permits by states. A lot in Utah. Negative, or a lot to the downside. Negative 31%. That's 12-month, though. Not everybody's negative here on the 12-month. Builders weren't really optimistic at the end of last year. Apparently. All right, what do we have here? Affordability by markets. Highlight 4 of the most and least affordable housing markets. Minneapolis and Indianapolis. Most. And then I'm assuming these are least. What is this? Most affordable. What is the Chicago area supposed to be most affordable, really? In DC? Yeah, I guess so. And then least affordable. Los Angeles, Miami, Riverside, New York. I don't think any of that is a surprise. All right. Let's go over here for a moment. What's Varnes got to say? Nothing. He's just going to smile at us. That's actually quite scary. No, please. Well, that's a nice shot. I like the shots in New York City. Mostly because I like New York. Why can't I change the freaking channel? No, now I've changed it too much. No. Loser. That's all right. We'll get back there. I should just stop changing. What the heck is going on? This is ridiculous. My little, I think my little laser thingy broke. Here, stare at this home builder. I don't know. What do we got here? Where the home builders are building. Look at that. Builder exposure to the top 50 markets. Stare at that for a second, will you? I'm going to just go punch it in myself. It's the point of having a remote control if it doesn't work. All right.
Corporations have not brought their prices back down, even as inflation has come down, even as supply chains have been rebuilt. It's time to stop the price gouging.
That's what made me think of it, because when you're gouging, that is true populist rhetoric. Because if you go to Costco, which has had unbelievable numbers and done incredibly well, they're saying that inflation is coming down in price. But David, it's coming down in the rate. It is still not reduced. Now, Walmart did reduce some prices.
They did actually reduce
largest
some prices.
retailer. I thought that was very impressive.
Well, right.
Did not
to your
get
point,
enough
things
credit
cost
for
a lot more than they did 4 years ago,
They do.
without a doubt. Now, as we all know, given we focus on this endlessly, the rate of inflation has calmed considerably.
Right.
Maybe running at like 3.2,
But is that
still
a
not
reason?
at the level that the Fed
Right.
is targeting of 2%.
Now, look, what can you do? Homes, 10% of the economy, have gone up 35%. But what are you going to do? You file a lawsuit against Lennar and KB Homes because you think they fix prices? They don't fix prices. That's just the price. They figure out
And
what.
by the way, there you've really got a lack of supply.
Right. I mean, it's certainly not their fault. I mean,
They're building what they can, but it's a lack of
think about
overall
it.
supply because people can't move because they can't abandon their low rate mortgage.
Right. That's just but that's an aberration, obviously. But think about it. You're Doug Yearley from Toll Brothers. And I tell you, we're about to have the fastest rate cycle increases in 40 years. Would you want to put up more homes or fewer? Yet these guys are actually pretty bold. They put up a lot of homes. They didn't get hung. So I think, Pulte Homes got a recommendation yesterday. I see a situation where a lot of prices are intractable. And I think people are really wondering, well, why is food intractable? Why can't food come down? Why can't there be a surfeit of beef? Well, if you look at Tyson Foods, they didn't make their numbers. You'd think that someone's getting hurt. But I don't think people, when they go to the supermarket, feel that there's anything that's even remotely like it was. And we never... I think that the used cars are just so much higher. So these things have to come down.
So much higher than they were. What, pre-COVID?
Yeah, because there's just, again, not enough supply.
Even though they have been coming down.
They have been coming down. But remember, again, we always have to put that point out. Coming down from a very high level, but nowhere near where you expect the trend line would be.
Right. Well, we have disinflation, but not deflation.
Right. And don't you think if you're a presidential candidate, you heard, if the president follows up on the idea of who's gouging,
well, listen,
we would next time we have congressional hearings
there's
on
an election
gouging.
less than a year away, and he's getting low marks in the economy, regardless of how strong it may be. To your point, people on the lower end perhaps.
Well, that's why I'm focused on it, because I really think that when you think about what's happening, we're too close to it. We're looking at an unemployment rate that seems to be stubbornly low. The American people are looking at a supermarket that's stubbornly high.
That said, Jim, back to the headline we just shared, 9.6% is a big number. It's a
It
big
is.
jump, and so there is still demand. There is obviously very low unemployment,
Right.
and therefore people do still have money to spend, it would seem.
Well, look,
the lower end may be pressured, but frankly, not to be dismissive, but that's not what necessarily drives the broad economy.
But I was trying to drill down with Harley Finkelstein, the president of Shopify, downgraded today because the stock seems to be too extended. I'm not so sure about that. But one of the things that I find is, okay, so who are these 30,000 new businesses? Who are the 13,000 new businesses that got their start at the beginning of Cyber Monday? Who are these people? Are they people who already have jobs? Are they people employing other people? I want to know who these people are, because this could be the secret to the new economy. Might be people who are, just opening up so many new small businesses, and that's employing people. But it's a risky thing. To open a small business. So there's just a lot of moving parts. And every time I try to put together the MasterCard data and the Shopify data.
About 44% of the economy is small business. Of course, it's the goal of every small business to become a big business. So does that make a small business inherently much riskier?
Said at the beginning.
Probably.
I'm taking a pass on that. I don't have the brick and mortar numbers. I just can't make a judgment.
Mm-hmm.
How can you make a judgment without knowing what Walmart's thinking? Walmart's the biggest retailer other than Amazon.
Right.
I'm not going there. I am going to try very hard to find out what Amazon's doing, but that's not easy either.
Yeah.
I just think that I see so many people drawing conclusions on the consumer, and I think that they're just plain wrong.
All right, but again, back to the endless conversation we have, where a consumer may be weakening, but that isn't also not necessarily a bad thing when you think about the Fed.
No, and that's why I think that we're not going to raise. Micron, just a dramatic up.
What are you doing?
Sees revenue 4.7 billion, had seen it 4.2. I've been waiting. I did a piece yesterday at the top of the show about how the PC cycle is back, and you have to get long these stocks. Let's see what they really do.
The stock's down.
It's not worth it. But I keep thinking that the PC cycle's coming back. We have to talk again about AI.
I'm looking at Micron right now. Q1 adjusted revenue, 4.7 billion. Their expectation was a midpoint of about 4.35, 4.4. Came in at 4.7, so that's a beat. Now sees revenue approaching 4.7. Yep. Improved supply and demand and pricing. Wow, that's a good little headline to see there. Improved pricing and chips.
Extraordinary.
Is it the most recent?
It just came out.
Oh,
December issue, and what it talks a lot about how he's able to charge what he wants. That he is. The first line of the piece is like that he's a quiet monopolist. I'm trying to figure out who's really raising prices here and who's not, David.
Right.
And I don't think everyone is raising prices. If you go to CSX, they'll tell you they're rolling back prices.
I want to come back to Mike.
Okay, I'm going to get the source on pricing because the little tape here implies different.
The company announcing it's updating its revenue, gross margin, and operating expense. Let's just give you the headlines itself. They are saying they previously got it to revenue of $4.4 billion and non-GAAP gross margins of 4% 4%, but they're saying as a
God, they have
result
the
of
worst
improved
margins.
supply and demand balance and improved pricing, they do expect revenue will approach 4.7 billion and non-GAAP gross margins will approach.
Could they go by Advanced Micro? Just
Why
go by
is the
Advanced Micro.
stock
on
not
this.
reacting positively to that?
So improved pricing is either them charging more or improved pricing on supply.
Vicious whisper. But let's get Sanjay Mehrotra on the phone.
Well, he's going to be giving a fireside chat. I believe it's today at a
Get the
UBS
fire going here. We'll do
technology
the chat right
conference
here
in Scottsdale.
Everyone's giving fireside chats. Is it cold somewhere?
Yeah, it's
Good
cold
question,
here.
huh?
It's actually cold here.
All right.
By the way,
Anyway,
speaking
I'm on the hunt for companies that have actually gouged. Now, I think the idea that Micron at 4% margins, they're not gouging. I think the idea that NVIDIA is not gouging because they have a lot of intellectual property and they've got to get
Well,
coup.
I mean, what is gouging? If you have what everybody needs and you're the only provider of it, shouldn't you be able to charge as high a price as the market will
and
bear?
Remember, what Jensen Huang always says is, look, the moment you buy it, you can make money with it. The payback, he says, is instant.
Yeah, I do think that's interesting. I mean, I was listening to Biden yesterday when he was talking about companies price gouging. So is it that pricing, or is it price gouging, or is it supply and demand imbalance and you just adjust pricing to where demand is? I don't know. Jesse, thanks so much for being a member right here. Welcome. Back to the old self. That's awesome. As far as somebody's here asking about that politics, yeah, I got to figure that out. I part of me is tempted to make it like a just chatting and politics, something like that. It's kind of fun. I was watching Bloomberg, so now I got an echo. Kevin, JB, you got to pick one, man. No, it's all right. That is funny though. Thoughts on the Israeli semiconductor TSEM tower? Never heard of it. Yeah, a lot of these, like I think of American Tower. It's just this collection of so many different investments. It's incredible. AI will eventually know you better than yourself. Oh, that's an interesting one. You could add your own Kevin context to an AI assistant so that it works for you instead of a general approach. Yeah, that's true. In GPT, you can kind of program your personality in it. Do you think long-term yields will ever cross over 5%? Well, I mean, they some of them are, but do I think the 10 years is going to go back over? I mean, I hope not. You just have to, but one bad inflation report and we'll skyrocket right back over, right? I think AI will be better than a course in the future for learning. That's interesting. I think that'll take a long time. I don't like. I ask AI just to see what it'll say about investing in real estate, and it's almost like it's perpetuating the memes of how to invest in real estate versus reality. So eventually that'll get better. Well, I don't know. It's a good question. It's not there yet. All right. Don't couch me, bro. Someone here, Pharaoh Tower says Apple has 100% overpriced. Really? I feel like there's always a wait to get like their phones and stuff. I wonder what that wait is right now. Maybe there's not anymore. Like if I want an iPhone 15, can I just go pick it up right now? Maybe I can. Buy. Let's find out. Buy iPhone 15. And let's go. I don't know, whatever. Pick a color here. Pick a size. All right, that's pretty good. All right, when can I buy it? Free shipping or pick up from store. Yeah, that's great. When's it going to be available? Is it available now? I don't know. Where's the buy button? Oh, there. No trade-in. Just buy. Connect to carrier later. Oh, so many buttons now. Okay, so order now. Pick up at Apple Store now. Oh, they have them. Yeah, maybe you're right. Wow, there was not much of a delay at all for getting these. Oh, if I go for the Max, it delivers in 2 days. Oh, okay. All right. iPhone 15 Pro will deliver tomorrow. The Pro Max will deliver Thursday. I mean, that's basically immediately. Yeah. No more iPhone shortage. That didn't last long. Economy being generated by AI. In Romania, I'm waiting for an iPhone Max for 2 months now. Wow. Rasmus, why separate live streams versus the original channel? Where have you been, man? Been having this discussion for a while here. All right, cool. So let's take a look at sticks, and we'll get to what the suits are doing. So Micron's down 3% after their earnings here. Enphase sitting at $97, down about 0.5% in the pre-market. Towards the upside, you have Affirm up 2.6. Purple penny stocking. SoFi, Best Buy, Tesla. Tesla's up 12, 13 basis points, 5 points on NVIDIA. No clear direction or movement here. If I go to suits, nothing new from the suits, and no data yet. All right, we'll keep listening here then.
The other trend that's interesting, you'd mentioned the gold bars, and this is something that we've been
Bars?
tracking for a couple of weeks now, is young Chinese, like Gen Z, that are much more interested in buying gold. And so what they're doing is that they're buying about $50 to $80 worth of gold, and that's usually in the form of a gold bean or a koi fish or something else. That sometimes it's jewelry as well, because they see this as a way to save for their future and something that's manageable. Chinese have traditionally loved gold, but this is something that we're seeing much more. And it's interesting because it's among young Chinese, which when I think of gold, it's usually been kind of the older set that's been interested, but now you're starting to see a bit of a change.
Eunice, it's great to see you. I know we get to see you later this week, which is really terrific. I want to talk about an executive order 6102, which was FDR May 1 of 1933, where he confiscated your gold. You're an American. You had to give your gold to the government. I find it hard to believe that the PRC is letting this happen when FDR wouldn't let it happen.
Well, I think that the PRC would definitely want to make sure that there isn't this huge outflow of money. So we have seen that with capital controls or other ways in which they would crack down on illegal, say, money changers, for example. But in terms of the gold, it's something relatively new, and it's not necessarily something that we're seeing this huge outflow of in terms of like real nuts and bolts of people suddenly opening up their luggage and then there's tons of gold in there. But one of the benefits of that I've heard too, that of investing in gold, is that you could take those little beans and like the jewelry and just kind of sprinkle it around in your luggage and then head out. And now that Chinese can travel much more, it's seen as a more palatable way to invest.
I wonder if Costco.
Terrible.
Costco has gold bars now you can buy. I wonder if they have Chinese Costco's. The other thing, I'm confounded by the government there. We did the Resolution Trust, RTC in our country, and our government seized all these ne'er-do-well lenders. I mean, I often find that the PRC is considered to be anti-capital, so to speak. Our government's done things that they seem like not even capable of doing. When are they going to seize these property developers and just say, okay, listen, you're out, and we're going to take it so that the basis is new, and we're going to distribute it to wealthier people who can buy these things, and just bring all these developers to their knees.
Yeah, well, that's not happening just yet. The government hasn't wanted to take on that much of the responsibility and know that there's going to be a whole lot of debt that they'd be taking on when they're trying to make sure that they don't have the same experience that they've had several years ago after the financial crisis, where they kind of got dinged by all of the investments and debt that they had racked up. So still kind of waiting to see what the government's going to do about the real estate sector. But yeah, it's just anyone's guess at this point.
Yeah, you got that real estate sector in America too. I was just sort of digging around in the Census Bureau's release yesterday. Look at the downtrend that you have in new construction pricing, and so it's pretty pronounced. You can see the downtrend right here from October of last year. You're at 496, trending all the way down to 409 here in October for new construction builds. It's really difficult to look at new construction and say new construction is doesn't have some form of volatility from the concessions that they give and provide. If you sell a house for $500,000 with $50,000 in concessions, and then the next month you sell it with $10,000 in concessions, but for $460,000, you haven't really changed what you're selling the house for. You're basically selling the house for $450,000. But one of them is being reported at $490,000 and one's being reported at $450,000. So I do wonder how much that volatility plays in to this. But if you go into the chart, there's a clear downtrend in the median sales price of new homes. This is new construction, which personally makes me wonder if you're going to see a little more pressure on real estate pricing in those more likely to build areas, which makes sense because you're increasing supply and then potentially a lower, sales price for that new supply. Yeah, and so that's where I thought this was so interesting, which we were just looking at. Nationally, single-family home values rose 1.8% year over year in October. But then when we look at that's the single family index. Then we look at where building is being done and permits are being done. It's still in those COVID markets, Idaho, Nevada, Utah, Arizona, Texas, Florida. Is that going to lead to an oversupply in those areas? And those are some crazy permit pulls. So it makes you wonder if those dark green areas are going to get a fat oversupply of homes, and therefore you see a softening in pricing. Oh, it'll be really interesting. I'm certainly going to watch it. All right. Let's see. So we're now 8 minutes from the bell. Ooh, the Suits finally posted something new. Stock futures pointed towards slightly lower open. Traders awaiting remarks from a slew of Fed speakers. Oh, whatever. Fed speakers, so exhausting. Except for Jay Powell, who'll be Friday. Home prices extended their climb. That's, hold on a second here. That is the S&P. Oh, that did just come out. I thought, that came out. Oops. Did I set my time to Eastern? Oh, I did. Whoopsies. Okay, yeah, interesting. So for September, you have the FHA house price index come in at 0.6 versus the survey of 0.5, so you beat. And then the 20-city month-over-month average comes in at 0.67 versus 0.8 expected. Slight miss. And that's seasonally adjusted, though. And then year-over-year non-seasonally adjusted 3.9% versus, 3.9%. Okay. Interesting. Interesting things going on in that new construction. All right. What are they saying about Zscaler?
So let's go back a few weeks ago to Palo Alto, where there were issues that Nikesh Arora talked about that maybe billings wasn't necessarily the exact way to look at it because billings weren't as good as remaining performance obligations. I listened to Jay Chaudhry last night. Now, this stock was upset.
Oh, somebody here, architect here. How would this relate to luxury new home builds? I don't know how this relates to luxury home builds. Because this is a median number. So changes at the extremes don't necessarily have to make a big difference because you're not really measuring the extremes. You're really measuring the change in the middle. So theoretically, that's actually an interesting point. If you have less sales so like you have 10 sales, 1, 2, 3, 4, 5, 6, 7, come on, 7, 8, 9, 10. You have 10 sales, and I don't know, your middle numbers are always going to be this sort of 4 to 7 range right here. Theoretically, you could have a giant skyrocketing of prices in the lower end, which I guess I should draw an up arrow. And then in the higher end, you could have this giant plummeting in price. And does that actually really change the median? If you're looking for the middle number, it changes the average, but these were median numbers. So it makes you wonder, like, if you get less luxury home sales And, or, well, you'd really have to get to that upper middle. You'd have to have less upper middle to really, I feel like, change the sales numbers. So more volume in the lower price points, which almost makes sense because you're less interest rate sensitive. But still, it's a nice little correction there in new construction. And even though it's volatile when you zoom in, it seems like it's been pretty straightforward here. How does this compare to 08 with new home construction prices? So if I go peak 262, 205. Ooh, that's similar, isn't it? 205, 262, 22-ish% on the median new construction. And housing fell like 40%. But this is the median new construction. 496 down to 409. 409 divided by 496, 18%. Not as much. Still a nice little droppy doodle there in this median measure. Oh, that'll be interesting. HouseHack Detroit area. Not at this point. You know, I was using this new like little floor plan making app yesterday, Polycam. It's kind of cool if you're on the floor plan app. Somebody recommended it to me, but it's not that great when you're using the LiDAR. As cool as it seems to walk around with the LiDAR. What is this? Me, Kevin, what do you think of the disdain for younger entrepreneurs amongst Gen Z and younger millennials? I recently saw an article of a comedian mocking a new business owner, and it's increasing. Yeah, the whole anti-capitalism thing, I think, is really hurt because of inflation. You know, people kind of give up and feel hopeless. Yeah, the Tesla won their lawsuit, won an injunction on that strike. We covered that yesterday in the podcast. So Racer TV, you should watch the podcast, the Meet Kevin podcast. Deactivated my Twitter last night. Too many videos of somebody getting shot, blocked accounts, reported, nothing worked. Yeah, Twitter's very interesting at trying to feed you stuff that's certainly dramatic. But then again, I guess to some extent, do you get that on YouTube too? I guess it depends what you watch. See, on YouTube, you watch like interview videos, and they're really good. They'll just only give you interview videos. They just adjust the algo so fast. It's so interesting. Yeah. All right. So we're a minute and a half now from the opening bell. Does liquidity really explain the rally? Amid discussions about the economic landing, Simon White argues that the S&P 500 is set for a record-breaking November, propelled by remarkably favorable liquidity positioning. Despite expectations that the Fed's QT program will diminish reserves, a surprising surge of nearly $200 billion in central bank reserves over the past month has defied expectations and projections. This resilience has contributed to the Treasury's decision to support a significant portion of the fiscal deficit through bills with no end in sight. In other words, monetize the debt. Create more treasuries. Basically creating the money the Fed's vacuuming up. Oh, no way. Is that right? Think about that. No, because the Fed, to vacuum the money up, you're taking the money out of circulation. So you're selling the bonds. So you have more bond sellers. But you have that reverse repo facility that still has like $900 billion in it. So you got enough cash from there you could use. Does that money otherwise really go to the stock market? Well, probably not. So maybe that's why. Okay. Let's listen into the bell.
Is pumping as much and China's buying everything. So India has been taking advantage of largesse. So I come away and I say, it's just as long as we're pumping and people don't realize that we can be the marginal seller. Now, a lot of people say short the short. Right. And the shorties just they want to keep above 70, but below 90. That's where they hook us. Don't let us open up marginal properties in the Permian and certainly in the Bakken. You don't want to do it.
All right, here goes a confirm. Look at that. 2.3% trying to green candle. Nvidia goes for a red candle. Oh, Tesla up all of a sudden 70 basis points. Apple just turned negative. What is this? QQQ, negative 12 basis points. There's Micron, not really doing anything. That's some weird buying pressure going in there on Apple. Etsy 68. Trade Desk, 6 basis points. Nothing going on here. Oh, and phase red candlestick. All the green you can have at Tesla turns to red at end phase. And if they are both red, let's just not talk about it. All right. There's our open with Nvidia. Still trying to figure out what it's doing. Tesla too, still trying to figure out what it's doing. It's about somebody came in and just bought a bunch before the cyber event. It's interesting.
Always expect a company to get a higher price to earnings multiple when you have non-cyclicality. Now, David, I think that a lot of what's going on right now are people trying to figure out what multiple to pay for different stocks.
Yeah.
This is not an expensive stock.
It's not expensive.
No.
I mean, we've talked often about, of course, it's been run by a gentleman named Hock Tan.
Right.
He's
lost the lead. Tesla just went negative. Welcome to the opening bell, where you literally have no idea what's going to happen in the next 15 minutes. Here's the cues. Here are, or here is. I don't know. It's a singular entity.
So it is not an insignificant
right, and
player.
It's very bound up in, like Cadence and like Synopsys, very bound up in NVIDIA's world of artificial intelligence. It also just has straight up business, the way you would think of Texas Instruments.
There's Palantir trying to move. Oh, and Tesla green it. Just don't look at it. If you just don't look at it, it'll be fine. That's the way to do it. That'll send up the positive energies. Coinbase up 2.7. Coinbase has been killing it, like really killing it. $123. You know my thesis always is that if all the other stocks around you are going up and your stock's not going up, it's just a matter of time until your stock goes up. But unfortunately, when other people's stocks go up, sometimes people paper hand their stock and then they go chase the ones that are going up, and then their old stock goes up and then they get screwed. And that's how you go broke.
Beyond that, it just talks about that's only the beginning in terms of what you actually have to be doing. And then it also discusses the fact that, frankly, many U.S. businesses are withdrawing from China.
Yes. Well, almost everyone feels,
and or taking a lot of cash out if they can.
A lot of people feel the supply chain we're very intertwined still, but they would like to break away from the stranglehold of China. I will point out, David,
although that's not going to do much for helping inflation, by the way.
No, China is a price cutter, but so is Mexico for that matter, and it's easier to get here. Now, was this a cheap shot, David? That there were many people at the dinner who paid money.
Yeah, it was kind of. I mean, it's not like he paid money to get his deal approved. His deal was going to be approved. At least he thought it was going to be approved. That's why they held everybody in that election for weeks. They thought it was going to be weeks earlier.
Right, but I do think that the
but it was notable in timing. It was. And then they also referenced MasterCard as well, getting something approved in China, having attended the dinner.
Again, I mean, I just think that it's the other way around. I look at this and say, all right, China's trying to show us that they're not as hostile.
Right.
And I think that this is not the way to show it. A big Boeing order would be
whether she was deserving of 2 standing ovations, I think is more of a question. I'm thinking that he did receive during the course of that dinner. It seems a little odd.
Well, there are always American companies where it's very important place to do business. We know Nike, we know Starbucks.
By the way,
Apple.
I want to get to the name at the top of that list, but let's come back to Micron for a second. Then we'll talk PDD. Because you and I were questioning what seemed to be positive news from the company where they increased their guidance. What I'm seeing here is some elevated expectations for gross margins had been ahead of this morning's presentation. They're giving a presentation. That's why they updated guidance, because they will be presenting at a investment conference. And so, Jim, it does appear to be that a lot of the hedge funds and the like had gross margins that were perhaps even more than what the company is now guiding to.
Yeah, if you want to make money on this situation and you don't want to be hurt by the not great gross margins of Micron, just go buy AMD, which has a lot of things going, including a very big December 4th meeting.
All right, let's take a look at some of the numbers here now that things are balancing in a little bit more. You've got Coinbase pushing up about 3%. Looks like you're trying to push green here. You've got ChargePoint, down another 4.99%. Now that one's a pretty rough one. You've got volatility actually still sitting at like under 13. It's crazy how low the vol is. Roblox 1.3, Tesla's now up almost 1% here. There it is, 1%. ARM up 0.7. Feels a little rally-ish. Let's just be real for a moment. There's so much freaking money sitting on the sidelines. And the Federal Reserve starts getting aggressive with rate cuts because inflation falls. There's no way people on the sidelines don't get convinced that it's time to buy stocks, in my opinion. That's always been my thesis with the volatile Nike swoosh. Because quite frankly, I don't think investors really care about whether we define a couple quarters as recession or not. They will care if we have an unemployment recession, which the Fed obviously strives to avoid. But you want to position yourself for, 18 months to 3 years out in stocks, if not more. And I have a hard time seeing people justifying, I'm going to take a 5% yield when rates are falling and when inflation is for sure gone, as opposed to, I guess at the same time, then forego the opportunity in stocks. I don't know. Well, who knows? I guess we'll see. What's going down? So, yeah, ChargePoint's down 5%. They're probably going to go bankrupt. I'm not too optimistic about them at all. And Affirm just went negative 1%. Where is somewhere around here? There it is. Yeah, about 80 bips. And Nvidia's down about 25. Anyway, it's my thesis. See what happens with the Qs there. All right, Jimbo, what else?
Finance. I mean, it's a little embarrassing because if I worked there, I would obviously have to resign today.
Do you want to focus us here on what it is you're trying to explain?
So they have it. Let's use this tweet for a second. This is very hard for me actually, but they have a writer, for instance, Domino Abrams.
Somebody here says, nonsense, I've been on the side for 2 years. When did you sell? So good for you. So I have not been back, or I'm not going back until the crash. You know it's coming. Money market earning me 5% and I sleep well. Well, I don't know that the crash is coming, but here's what I do know is coming. Money market yields plummeting. So, there are two realities here. In a year from now, we could be in a second wave of inflation, Donald Trump presidency, build everything at home, fire a bunch of people. Now you have an unemployment recession and more inflation. And those are things that he has said, right? Fire people in the federal government and, bring manufacturing to America, which Biden is pushing that as well with the Inflation Reduction Act. I'm not being political here. These are just things he's said. So let's say you have an inflation surge around the election time of next year. Trump will get elected because if people are pissed about the economy, they'll elect the other candidate. And maybe that'll be right. Maybe that'll be the great time to buy stocks. Alternatively, inflation continues to trend away. Your money market goes to 3%. Stocks are, the indices are broadly 10 to 15% higher than where they are now. And then you're going to be pounding the table going, wow, well, I'm certainly not going to buy at these prices. I guess I'll just sleep stress-free earning my 3%. And then a year later than that, stocks could be up again another 10% as everybody else around you has capitulated. And now your money market's yielding you 1% and inflation's 2%. And you're like, damn it, I blame the Fed because they're printing money again. Why can't I win? That's the risk. But, the risk is two-sided. And until we eliminate the near-term risk of a crash, still going to have money sitting on the sidelines. So we shall see. All right, let's listen in.
As you can see from the reaction in the stock market this morning, Investors like it a lot.
And there's always a Chinese stock people get enamored of. But we've seen this movie.
You forget about the world crisis of war coming. This is different. I mean, I guess there's a chance of expanded conflict between China and Taiwan, and then the Ukrainian issue gets worse. I don't know, man. I don't really see it. The Ukrainian issue has really turned into a fight over the Donetsk and the Dnipro. It's nowhere near as volatile as it used to be, with people being fearful about nuclear war. Hamas and Israel are on a, ceasefire right now. Hopefully we can resolve this. And sure, there's always going to be drama with China because they're always rattling their saber. But, even to where Taiwan is now exposing service members of their military as being Chinese spies. But I mean, what world do we live in where China says our economy is bad, so let's go to war? Their economy is so broken. It's like that's the perfect way to eliminate the CCP. That's how you end up getting the Chinese Communist Party overthrown. Is get yourself into some stupid war that pisses everyone off even more, and you lose even more membership. I don't know. I mean, sure, that's possible. But I mean, I put some kind of escalated World War III kind of event at like a 5% chance of happening. I'm not investing for that. Charge point, 7% to the downside. Oh, it's like going straight down right now. All wars are bankers' wars. And you just basically saying, oh, war clears all debt. Well, I mean, when there's a lot of inflation, you can clear your debt, your old debt. All right, what else here? Does the Israel-Hamas conflict have any impact on the market? Yeah, I mean, a lot of people have wondered if instability in the Middle East really affects oil or stocks, and so far it seems like the answer to that is no. It's really just the concern over these conflicts spilling over into, Iran or some kind of armed conflict with a larger country.
Sale, essentially, you can see when the stock moved. Are due Friday. They're due Friday. And from what I'm being told by people close to the situation, you see it right there, 5 separate parties are expected to bid.
Oh, my God.
Now,
Really?
we know, of course, Cleveland Cliffs, and we know ArcelorMittal, and we know those are whole company bids, right? Their bid is just a simple, we want to buy all of it. The others get a bit more complex. I've reported on the Argentinian company Techint, might need a partner there. Stelco, would Nucor want something? You go to Germany, Korea. I don't even know all of the bidders here, but I am told with confidence by people.
Yeah, Sean, ideally what you want is a bull steepening, not a bear steepening. A bear steepening is, when essentially you have the 10-year rising while the 10-year falls, at a faster pace to kind of reinvert the yield curve. I think, the best case scenario would be just to plummet in both of them. And you could get a bull steepening where you get the 10 falling quickly, but you have the 2 falling even more quickly, and then eventually lapping the 10. That would be ideal. But what's ideal and what is reality might be 2 different things. They generally are. Market, nice little fat red candlestick there. Last second. If it looks less bad if I do it like this. There we go. It doesn't look like there's any particular news that came through here. Let's listen here.
That it's just going to be a process. But again, a process that, as we've reported consistently, has been a robust one in terms of getting interested buyers.
Bite-sized company.
Yes.
$8 billion.
Yes.
Nucor is America's champion. That's the largest. And Nucor has done periodic acquisitions. I think this would be highly unlikely because they do have a different kind of mill strategy, whereas Cleveland Cliffs has a similar mill strategy. Cleveland Cliffs, by the way, I think has done a fabulous job, and they pretty much own the auto steel. I know Nucor has some auto steel, but
Cleveland Cliffs has a standstill in place that expires December 1, and there have been some folks.
All right, well, we'll be back tomorrow for the next market open live stream. not too horribly much news this morning. You know, market's kind of all over the place right now, so we'll see where it trends in the day. But let's go ahead and push the button in the meantime. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right, see you in the next one.
Just close the fucking door.